Hey, what's going on everybody? Today I'm going to be talking about the S Corp home office tax deduction, and I did make a video about the home office tax deduction earlier, but I only covered sole proprietors and LLCs. But in this video I'm going to cover S Corp specifically. So there are a couple main differences here. That's why I needed to make another video, but hopefully I'll make it clear. There's a couple things you need to know about the home office tax deduction. I'm not going to go over in this video. I would just watch my previous video to get that information. But basically your home office, if you have a dedicated space in your home office, then you may be able to deduct a portion of your home expenses in the ratio of that space compared to your entire home. And you can easily do that as a Schedule C business owner, but as an S Corp, it's a bit different, and so that's why I'm making this video. So again, there's two ways you can do it. The first way is for your business, your S Corp, to pay you rent for your home office, okay? So like you'll have your home office here where you pay rent or your mortgage or whatever it is, and you pay for internet and telephone. Since it's your personal home, you can't deduct any of those things from your S Corp tax return. So one way you can do it is to have your S Corp pay you like a small rent each month in order to use this space as an office for your business. I don't really like this method for one reason, because although the company gets to deduct the rent expense from its tax return, you then personally have to claim that income as income because it's rental income that you're receiving on your home or on your property. So it's not going to be a one-for-one, it's not going to be one expense, one income. So it's not completely a wash, but the fact that you do have to claim it as income means I don't like this method at all, and you shouldn't either. So that's why I'm going to go over more detail into the second method, which is called the accountable plan method. And as you can already tell, this is going to be really fun. So an accountable plan is a plan that employers have in place to reimburse their employees for any expenses that the employee incurs on behalf of the employer. So it's like an expense reimbursement plan. So basically for this to qualify, the expenses have to be business related. They have to take place within a reasonable amount of time or a time frame. A reasonable time frame means like you were employed with the company and you incurred the expense while you were employed with the company. Something like that, okay? And the third criteria is that the employee has to refund or return any money that the employer gave it if they did not use it for business-related expenses. In order for this accountable plan to work, there has to be a policy set in place from the employer or from the company, and all the expenses have to be accounted for and documented. And lastly, the one important thing again is that there is a written policy in place that kind of provides the guidelines for these expense reimbursements. So I'll go over one example with you, like a simple example of this. So let's say you work for a company and you're a salesperson. You earn a W-2 income from this company, and one of your jobs is to just maintain client relationships. So maybe what you do is sometimes you take a client of the company's out for lunch and you pay for it personally because you don't have a company credit card. So you're taking client A out for lunch, you pay for the lunch personally. Well, you get paid a W-2, so it's not like you get to deduct that expense, right? So what you're gonna do is you're gonna keep the receipt from that lunch, you're gonna submit it to your company as an expense reimbursement because the company has an accountable plan in place. So you're gonna take that receipt, submit it with your expense report, you're gonna claim the amount of money that you paid for lunch, and then the company will essentially reimburse you for that money. And so then the company gets to write off the deduction and you don't have to claim it as income. So that's the basic example of how an accountable plan works. So how does it work for a home office? So for your home office, you have utilities that you pay for, a phone bill, internet, you have maybe rent that you pay for or mortgage, interest, you also have property taxes, all those things that you pay for personally, okay? So basically you're requesting your employer or your business that you want to be reimbursed for those expenses from the business. Now obviously the business can't reimburse you for 100% of those expenses because your home office is essentially only a small portion of your home. So you're gonna ask for a reimbursement for a small portion of those expenses. And that portion is calculated based on square feet. So you'll take the square feet of your home office, compare it to the square feet of your entire home. There you come up with a ratio. Let's say it's 10%. Then you're gonna take all your utility bills, all your home bills, mortgage interest, depreciation, even utilities, phone, internet, multiply that by 10%, and you're gonna request that reimbursement amount from your business. And then if you do that process and your business reimburses you for that amount, then your business gets to claim it as a deduction, and you personally don't have to claim it as income. You have to follow all the steps for this to be legitimate and for it to pass an audit. So I'll recap again. Accountable plan, you need a written policy from your business that basically outlines what the guidelines are for claiming an expense reimbursement. This is something you can find online as a template, okay? You gotta have qualifying expenses, which are the 3 things that I went over with you. The expense has to be business related, it has to take place in a reasonable time frame, and if the company over reimburses you, then you have to return the money, okay? And then third, you just have to calculate your home office deduction using your square footage of your home office, whether it's an entire room or just a small area, or whatever it is. It has to be dedicated use for business. You take the square footage of your home office divided by the square footage of your entire home. You take that ratio, multiply it by your home expenses, and that's the reimbursement you're going to be asking from your company. So pretty simple on paper. Putting it into practice could be a little more challenging, and could be a little more challenging getting in the habit of keeping receipts and all that stuff, or gathering the monthly bills for those expenses. But it's worth the expense, and it's worth the time. There's also something that I didn't really go over into much, which is depreciation of your home. Depreciation is just on paper. If you're using your home for business, then your home essentially will depreciate in value on paper, because you're telling the IRS, hey, I'm using this asset, and as I use it, it loses value over time, even though we all know that real estate typically appreciates over time. But for tax purposes and for on paper purposes, your home does depreciate over time, and you will be able to claim a partial deduction on that depreciation based on your home office ratio, okay? So hope that makes sense. Leave me some comments below if you have any questions or concerns or anything like that. And also, if you haven't done so already, please subscribe to my channel. I would appreciate that. And also, if you found the content of this video enjoyable and helpful, then smash that like button, and I would really appreciate that as well. And that's all I got for today. I'll see you guys next time, and take care. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him I'm a flicker. Bill, I'm in the mood for a change up. I leave the city and return with my change up.